India just launched a surprise missile strike on Pakistan. And while the world watches in fear, something else is quietly unraveling in the background. Money. Not just millions, we're talking billions of dollars moving, disappearing, and reappearing in unexpected places. Because war is business. After the brutal terror attack in Pahalgam killed 26 civilians, India responded with Operation Sindoor, a calculated strike on Pakistani soil. But even before the smoke cleared, global markets started reacting. Oil prices jumped overnight. Why? Because any tension between two nuclear nations in South Asia puts the entire energy supply chain at risk, from Gulf exports to shipping lanes in the Arabian Sea. Unmasking the money, decoding the drama. This is The Rich Report. India imports over 80% of its oil. A price hike could drain billions from the economy, and from your pocket if you live in the region. But it doesn't stop there. Defense stocks in India surged. Shares of companies like Bharat Dynamics and HAL soared within hours, as investors rushed into military-linked companies expecting huge defense contracts. You see, war fuels fear, and fear fuels money. The Indian government already spends over $75 billion a year on defense, and this strike means even more spending is on the table. That means more deals, more contracts, and more private players cashing in. Guess who wins? Billionaires who supply to the government, and yes, that includes some names you already know. Now let's talk about Ambani. Jio might be a telecom giant, but Reliance is also knee-deep in petrochemicals, infrastructure, and defense tech. In a conflict zone, communication is king. And Reliance's secure networks are already a quiet backbone for Indian agencies. And Adani? His ports are critical supply chains for fuel, coal, and even defense logistics. He owns India's largest private port network. If troop movement or energy imports get disrupted, it all goes through Adani's backyard. But here's the twist. While some are set to profit, others are bleeding. The Indian rupee took a hit. Foreign investors hate uncertainty, and the second missiles flew, capital started leaving. Stock markets turned volatile. Foreign direct investment could slow. Tourism? Practically dead in Kashmir now. And Pakistan? Their economy is already in crisis. Inflation is sky high. The IMF bailout talks are fragile. This conflict may tip them into a deeper spiral. And guess who steps in during chaos? China. Beijing watches every move. Their investments in Pakistan, like the $60 billion CPEC corridor, are at risk. But if Pakistan's economy collapses, China could seize even more control. Meanwhile, the US, EU, and Gulf nations are calling for peace, but behind the scenes, they're tracking trade routes, defense deals, and energy contracts. This isn't just a border clash, it's a silent economic chessboard. And the players? A few powerful billionaires. A few powerful nations. And billions of dollars shifting hands. The common citizen will see headlines. But the elite? They'll see opportunities. Because war has always been expensive. But for the right people, it's also profitable. This is The Rich Report. And behind every explosion, someone is counting the money.